Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Trump is facing sort of increasing hostilities to his policies. In the latest sort of setback, you've got him failing to sort of convince the Republicans that his one beautiful bill for the tax cuts, etc., is really what they want. The main stumbling blocks appears to be the sort of state and local taxes sort of offsets. Now that comes on the back of firstly Walmart looking at sort of increasing prices and actually going to notify the public and consumers the actual percentage of the increase that will be due to tariffs. And that's sort of quite a big turnaround because obviously, Trump campaigned on tariffs and China was going to pay for the tariffs. They're going to raise huge amounts of money. He's now turned around and told importers and companies they've just got to eat the tariffs. Which in a roundabout way is sort of admitting that China isn't the country paying the tariffs, it is the importer or the consumer. And his administration is also facing some major sort of pushbacks from the judicial side as well in terms of their deportations, as these people are not getting due process, which they are entitled to under the Constitution. So some major headaches for Trump there, and it's just going to be interesting to see how it does play out because he's not used to not getting his own way. But unlike his companies, he can't just sort of butt heads and just say, well, that's the way it's going and this is what we're going to do. There are various checks and balances to keep things on track. Now on the data side, it was quite interesting because there was a surprise fall in wholesale prices. But also a big fall in consumer confidence as well. That's down to 50.8 from 52.2. Now the tax cuts, if they do manage to get passed through Congress, that will see the deficit increase. And that's obviously having a little bit of a impact on interest rates. You've got the 10-year at 4.48. The 2-year is 3.97. But interestingly, the 30-year, that did just touch 5%. Now what hasn't helped interest rates as well in the US is the downgrading from Moody's from AAA to AA1. So again, potentially that just increases the interest payments for the US. There is still the ongoing debate as well about the private jet that Qatar is looking at giving to the US or to President Trump. A ceasefire between Russia and Ukraine and peace talks appear to be underway, although it looks like Russia is dragging the chain yet again. Which does raise the question really of how committed Russia are to peace negotiations. Now oil back up just a tad at 62.60 and change. Although interestingly, in sort of a recent interview, Trump sort of indicated that his ideal price for oil is between sort of 40 to 50 bucks a barrel, which is quite interesting because most of the shale producers in the US have a break even of around 65 bucks. Now, slightly better news in the UK. GDP was up, came in at 0.7 for the March quarter. But also as well, they appear to have sort of renegotiated sort of deals with the EU after the Brexit breakup. Which potentially should give the UK economy a further little boost. Now the rest of the EU region still just waiting to see the impact of the potential tariffs from the US. And just on the tariffs as well, it's sort of interesting that despite all the talk about lots of deals in the pipeline waiting to be done, Trump has come out and announced that he's going to be sending letters out to various countries now telling them what the tariff is going to be going forward, which would appear to imply that there are no deals on the table. Now, as expected in Australia, the Reserve Bank did cut the cash rate by 25 basis points, taking the cash rate down to 3.85. Now, if you remember, the RBA didn't hike rates as aggressively as other central banks, but there still appears to be sort of at least a couple of cuts in the pipeline over the course of the next sort of 4 to 6 months. And that will certainly give the Australian economy a further little boost. Now here in New Zealand, really waiting for the budget on Thursday. It's already been sort of well signalled that there's not going to be much of a lolly scramble in terms of giveaways. There's various sort of increases to sort of a little bit of government spending and sort of pet projects that really need attention, sort of health, education, etc. And then the Reserve Bank meets next week, and they're widely expected to cut the OCR by a further 25 basis points. And again, potentially a further cut in June and July of this year. Now, retail spending in April was pretty sort of flat, which, although is not that positive, it's a little bit encouraging that it didn't fall because, certainly times are still pretty tough out there. Tourism is holding up reasonably well, and they're sort of spending quite a few dollars. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.